Hello, everybody. Thank you so much for joining us into today's live stream. So, I hope you guys had such a wonderful weekend. For those that don't know who I am, thank you so much for joining the live stream. My name is Guna. I am basically someone who has been trading for almost 4 years now. So, what I do in my live streams and basically the main goal of my YouTube channel is to provide as much free information and free knowledge in terms of trading in hopes that it can potentially help any one of you guys who is genuinely interested in becoming such an amazing and powerful trader themselves. Hopefully that I'm able to give some sort of help in any way possible. So that's basically my goal. Okay, so if you guys are new here, please feel free to subscribe to the channel if you haven't already. For the past 2 weeks, I have been killing it in terms of going live stream every weekday as I told myself to do so. Okay, excluding the weekends, because to be honest, like guys, weekends don't really have that much of momentum. Not cannot trade. Okay, for crypto exchange wallet, for those that are new or maybe you are unaware of it, crypto exchange currencies, they do operate 365 days a year. So what that means basically, there's no off day lah. Okay, they don't have any holidays or whatsoever as of now. Okay, as of now, I don't know in the future because right now a lot of heat has been going on with Trump, with Elon Musk, blah 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 blah, right? And then also crypto, like crypto exchange is like going to be, how to say, maybe I can say going to be, okay, maybe will be like an official thing. Okay, it's not like it's not an official thing. What I mean is like it really be integrated into like a country's currencies line, the way like how we use, like now we understand, okay, my wallet is not with me, we use cash. Okay, we use digital money also, like whenever we pay online on. Okay, so basically that's the funds, right? Basically currency, our money currency. But a crypto exchange also becomes part of that system. That means we can actually pay with cryptocurrencies, which some states do. Okay, they do allow it. Okay, here in Malaysia we don't as of now lah. Okay, but US I know they do. Okay, when that happens, I don't know then if like bank holiday or whatever means it will affect or not. I'm not sure. Okay, I don't know. I don't know that side of the story. But what I can tell you is basically, if you want to trade crypto, you can do it Monday to Sunday, every single day. All right. My advice: Saturday and Sunday, keep it to your back test. Like really test out back your strategy, whatever losses you made. Don't look at it at the, how to say, the bad side of it. Okay, just keep it as long as you journal it. So that when the weekend comes over, analyze it. Of course, you should analyze your losses on the day once you stop trading. Okay, but then if you, let's say, I don't know, something comes up or whatever, right? I personally do most of my back testing, most of my analyzing, most of my future trades. Meaning future trades means like what trades I'm focusing on this week, which I will tell you guys in this live stream. Okay, the trades that I'm focusing on this week, all of that is done usually on the Saturday or Sunday, but primarily on Sunday lah. Saturday I keep it for my back testing. You guys don't have to follow the schedule. This is just my own personal way of how I've been doing it for quite some time now. Okay, so let's jump right into charts, guys. So today we are actually going to be speaking about ETH and also something about Dogecoin. Maybe we just go Dogecoin first time. Okay, if you guys remember, okay, I highlighted that about Dogecoin. I am basically waiting for the trade to come into a daily zone, take out a specific liquidity, show me reaction for me to enter. Okay, you guys can see that maybe it's 3 or 4 live streams back. Okay, I've said it in quite a few. I marked out the areas and everything. All right. This is what happened. You look, wait for price to come into the zone and enter after closure of bullish. This is after I saw reaction lah. It didn't. It didn't came back into this zone. You know how long I had been waiting when price was jumping around here? So long, so many days I've been waiting for this to happen. Okay, when finally price comes into and sweep exactly around the liquidity that I was interested in, I had one more liquidity line above this range. Okay, but I was hoping for it to go lower lah, because the lower price goes, if you're going for buy, the better price you get, cheaper. Okay, basically it's cheaper. So for this one, right, see, it's swept the liquidity, never gave me any opportunity to enter. I thought this was my opportunity. You see, it came down, okay, it came up. You see, a bullish fair value gap. I would have entered. You can see still my alarm is there. I kind of still have hopes. Okay, it came down, almost touching it, and then it shoot up. Do you know just this much, guys? This is a lot already. It's okay. It is okay. Yeah, this is just one part of what I have been going through ever since this happened. Okay? But it's okay, it's fine. Did I rush to enter or not? No, we shouldn't. This is still my zone. Okay? This is still a fair value gap. Of course, does that mean that it might come here? Maybe no. Maybe no. But we can never say like, okay, the future is uncertain, right? Because you can realize we do have a bullish fair value gap here, and price has filled it up, okay, and is respecting this area as of now. All right. Right now, if this closes right in the next 3 hours with a gap, this is another bullish fair value gap. So of course, I can enter off here. Can. I just need to see a bit more criteria playing into my strategy, because why? If right, price came back into this range, okay, if I entered here, I would be happy to put my stop loss, okay, below this range. All right, and then take profit. Okay, initially, of course, okay, see all this low resistance liquidity. This is like a long term trade, lah. Okay, I'm just aiming for the long term trade. Actually, higher God, see, this is the fair value gap. Okay, so this is the how to say, the planning lah that I had lah. Okay. But now, if I were to enter here, okay, I cannot put my stops here. Yes, 4 to 4, awesome. But you have to see how much of a distance in terms of risk I have to put out, guys. So unless I'm able to see certain areas of this place being protected by some sort of auto block, okay, support or resistance, something, you have to show me something, then I would be more comfortable to enter this trade and place my stops at least here. Okay, again, remember, this trade, I'm not focusing on the risk to reward, like, oh, 1 to 13, oh, that's how you trade. No, that's not how I trade. On average, my risk to reward is about 1 to 2, okay, 1 to 2, sometimes 1 to 1.5, okay, 1 to 3 on good days. All right, so you must see, it's not about that. This is just because I am analyzing this based on very big time frames, daily, weekly, 4 hours. Okay, so why the risk reward is bigger is because I am kind of wanting to hold this for long term. All right, see, I have areas that I've marked out quite some time. You guys can watch the live streams previously. That is the reason why. Okay, it's not about I want to go big. Oh, 1 to 13, 1 to 15. It's not that. My average is 1 to 2. I would say mostly my average 1 to 2. Okay, if you ask me, I sometimes take 1 to 1.5, 1 to 2, and then 1 to 3. On very good days, on 1 to 3, 1 to 3.5. All right, on an average, 1 to 2. That is my risk to reward lah. So this one I delete first, don't confuse myself. Okay, so this one I will just wait. Let us see. I want to see, since you got 3 hours somehow, right? Let's just wait and see. Already waited so long, already missed it, so it's okay. I took a Bitcoin trade, okay, the other day. It went beautifully, guys. Okay, this is very simple. I kind of entered this Bitcoin trade also because you see the daily liquidity. Also, I highlighted in my live stream. If you guys have joined the live stream, I really drew these lines that I drew in terms of the, how to say, the liquidity zones, all, and I advise you guys to wait for reactions, right? I hope you guys have entered based on it, because it went exactly like how we predicted it to be. Okay, this is the fair value gap that has been taken out. Why I went for this trade is basically I saw a reaction in the liquidity range that I am looking for. This is the main liquidity range. See, I never draw anything below. Okay, this is the main liquidity range I was looking for, and I saw a reaction. After that, according to my own trading strategy, okay, I even did a more detailed breakdown. I think it was just the previous live stream, which you guys can go and check out. I entered this trade aiming for the liquidities above. Such a beautiful trade, this one. Right now, right, guys, I'm actually in ETH trade. I've been holding ever since price came into this zone here. Okay, so if you want me to explain, you guys might laugh lah. Might say this is a little bit too how to say that? Basic. Okay, yeah, it is basic, but guess what? It works. All right. It doesn't matter if something is basic. It matters if it gives you results or not. For me, it does. Of course, I'm not only relying on what I'm about to tell you, what I did. Okay, there are more to it than meets the eye. But essentially, what is these are is basically support and resistance, guys. Okay, I drew my support and resistance lines based on where I'm seeing price usually gives me a reaction and is respecting this area. So I realized this was on Friday or Saturday. Yeah, Friday. See, yesterday Friday. So when I saw price break above this initial resistance, because why? Resistance is always above price, support is below price. Okay, I saw impulse move up, pull back, impulse move up, pull back. Where did it pull back to? Very important question. Every movement in the market, right? Start to realize the pullback is essentially where you make money. Okay, whenever a pullback happens, after that pullback ends, that is essentially where as traders we make money. Because why? Market moves in impulse, pullback, and then impulse. This is of course for uptrend. Example, I think I can inverse this. I saw someone did it. It was so cool. I never tried it before. Bring forward, bring back. Okay, I know Ken, I saw he did it. Interval above, interval below. Current interval only. Is it this? No, I don't know what they did also. Okay, never mind. I'll figure it out, then I'll teach you guys. Basically, what he do, right, is when he draw like this, he just press a button, then it will flip. Okay, that was so cool. I never knew I could do that. I always had to draw it again and again. Okay, so I show you guys that. Okay, there is always impulse, pullback, and then another impulse leg up if you are following the trend. Okay, see, impulse, pullback, impulse, following the trend. That is why as traders we primarily focus on this. Of course, not only this, please don't get me wrong. I'm not saying that only the pullback is what we're focusing on. That is not what I'm saying. Okay, within this pullback there is a lot of things that traders we see. Okay, within this pullback, what do we find? Okay, we find main things like key levels. Okay, we try to see what key levels are in this area. Okay, how high probably price is going to go to. Okay, are we seeing price come into a discount range if we want to go for sell? Okay, so sorry, premium range. Okay, if we want to go for sell, discount range if we want to go for buy. All right, what else are we seeing? Have we seen any form of liquidity sweeps? There's a lot of confluences, a lot of things that traders are looking for within the pullback range only. We don't really look at the impulse leg. The impulse leg only helps us to identify which trend the market is heading to. That's it. Because the impulse only allows us to understand where the market is heading to. All right? What is market usually driven by? Not only liquidity, okay, there are also fair value gaps, and they also market wants to test out some certain order block range. You want to test out support resistance, yes, but ideally, okay, the main thing that market is driven by is liquidity. I also shared in one live stream before, market, right, will only move up after it has moved down enough. What that means is after he has eaten enough of liquidity from the downside, then only he'll move up. So whenever you guys are predicting, okay, the market is overall right, I see the market going to go up in this direction. Good. But you must be ready and wait. The market initially will move down first before it starts to move up. Because once you have enough of liquidity, a very good example is the Bitcoin one. See this? Once the market, I initially told you guys the market is going to move up. Okay, these are all the areas that I'm aiming for. You see, he will move down first, guys. He will move down first. Once he take a certain liquidity range that he feel enough, then only he start to move up. Can you see or not? The ranges, he moved down, right? Okay, he moved down. How much of cutting corners he did? See, cut. But to move up, right? Okay, literally he just flew. Easily he just flew. This is what the market can do. Okay. Just always realize this. I will say it again. If you're expecting the market to move up, trust me, it will move down first. until it eaten enough for liquidity. He want to test certain order block, okay, test certain support resistance, all right, fill up certain fair value gaps, anything. It can be anything. That is why as traders, we always mark out our key levels and find out what confluences are price action telling us. What is price doing? Okay, after we realize that, okay, now is probably the time for us to go and enter for the next impulse move down or up. Okay, in this case down lah, because we're using this example, right? Then only we will start to enter stops above the high. Because why above the high? Why not here? Okay, it's not about being greedy or not. Okay, it is about understanding the matrix, not matrix, the how to say, the basis of how the market should respect a certain area. So for example, I give you an example. You see this move down, right? Okay, if this area is the area where he want to respect this resistance range, if this is the tipping point, and we are able to analyze this based on smaller time frames, trust me, we are able to do this based on smaller time frames. That is why we call it multi-time frame analysis. Okay, once we are able to analyze this in multi-time frame analysis and find a confirmation entry, to be honest, the confirmation entry would be this one, not here. This would be the confirmation entry. Okay, there are many ways on why. Okay, if you guys interested to learn personally from me, okay, you guys can register to the link in the description below. Text me through WhatsApp. I'll be more than happy to help and advise you guys further. All right, so this would be the ideally entry point, not this one, okay, this one. Okay, so why, instead of placing a stop loss, if this was our entry, instead of placing a stop loss here, like what we can do, right, we could place here, right? Is a lot more safer. Yes, can. Who say cannot? Can, of course can. But okay, but are you willing or not to put this much of risk inside of this trade and go for a one-to-one trade? For example, one-to-one is here, for the safe way of trading, right, in this trade, it should be above or at least in the middle of the order block zone. Why? It is because when price, not always, okay, when come into order block zones, okay, sometimes, right, it won't fill in. Sometimes it can just tap and then it can move away. That is what order block does. Order block is a very powerful area. Okay, but of course lah, in this case it's not order block. Okay, this case it is a support range. That is why you can see price tend to come below. I'm not saying order block won't go below. It does sometimes, okay, but there is times where it just taps the tip of the order block, literally the top part, and it flies. Okay, in this case it's different because this is a support range. Okay, so okay lah, you can get a one-to-one. Okay, roughly you can get one-to-one. Still a bit risky because you see your TP is below the support range. Ideally it should be above or within the support range. Okay, so why actually placing your stop loss can be placed here is because the basis of how price should react like. Okay, if this is the tipping point, remember, see how it moves? See, impulse, pullback, tipping point. Okay, impulse, pullback, tipping point. If this is the tipping point, you are able to analyze this and understand this based on multi-time frame analysis and have some sort of confirmation. Because let's be fair, trading nothing is 100%. Let's be fair. Okay, let's humble ourselves. We cannot 100% be sure of anything in trading. All right, but what we can do is we can add in as many confluences, okay, as many how to say, ideas lah, or to get our bias, make it much stronger lah. Like the concept I give you guys last time, if I give you a single twig to break, twig is basically a very thin stick. It's very easy. But if I give you 1,000 twigs to break at once, not say cannot, some people can do it, very strong readers can, but it makes it more difficult. Okay, so the more confluences you have, the stronger your bias and your area basically will be. So if this is the tipping zone, okay, based on all your confluence, you are able to analyze everything. You say, okay, this is probably the tipping zone. That means based on the price action and how market generally moves, it should not trade above this range. So ideally, for you to put your stop loss here, it's not about being greedy, but it's about really protecting yourself from any potential reversal. Okay, because like I said, if this is the impulse move down, this is the pullback. Okay, you analyze already, this is the pullback, this is the end of the pullback. If the market comes down here, the market should not do this. Okay, if you identify we are in a bearish trend, we are moving down, this is the end of that pullback, the tipping point, if you will. If you enter for a sell, you are following the trend. So by right, the market should not come up above this range. That is why some people put their stop loss above the range, because they know if the market comes up, that means probably the analysis is wrong already, and they lose a lot more lesser risk compared to putting your stop loss here. Because if this happens, probably price will continue the trend. Okay, it may be a little bit confusing, it may be a little bit complex. Okay, but with time, with training, with experience in the market, you will start to understand. Of course, there are some times, right, that you should not put the, how to say, the stop loss like this near. Please don't put it exactly at the tip lah. Okay, sometimes you have to put it a little bit higher, like for example maybe this high. The reason why is because you can also understand here is a bearish fair value gap, so probably price may want to come and fill up this fair value gap. Okay, maybe just mitigate it. Once mitigated, probably then price will start to move down. This can happen also. Yeah, so it's all about price action. It's all about how is price reacting in your key level. That is why we never we never enter a trade the moment price comes into a key level zone. We only enter a trade based on how the price is reacting from a certain key level. All right, in this case, did we react here? No, we didn't react here, but this would be the ideal reaction. Okay, because it could give us price reacted from this key level, and then it give us an opportunity for potential entry model to follow that bearish move down. Okay, again guys, if it sounds confusing, okay, trust me, it's actually not. It's just because you guys have not been exposed to it yet. If you guys would like to learn, I'll be more than happy to teach you guys. Just you can just text me directly actually, also to the WhatsApp link to find out more details. Okay, we're more than happy to reply you guys. All right, so there was a lot of in-depth stuff sharing already. Okay, so another thing, right, when you see this bearish fair value gap, right, I say, right, this base price actually got tapped into it here. Okay, so this is another sense, another confluences that you can see. Okay, it came into a resistance range. It also tapped into a bearish fair value gap. Sorry guys. And we are seeing strong reactions towards the downside. This shows that price is going to move down. Okay, it's going to follow the trend line actually. All right. So why is this now important? Is because since I went for a buy, okay, basically I'm holding a buy for this ETH one, right? Okay, I entered quite close around this range. Okay, my stops is here below this one. Okay, you might ask me, Guna, why never put your stops right below this range? Good question. It is because price actually came down into this range and then show me a reaction, a move towards the upside. Okay, it is just my own general rule of thumb. Okay, I like to place my stop loss on the second or third liquidity range. This is just me. This is just how I set my own rule. Okay, I won't set on the third liquidity range if it's really far. This one is really far. This will be the third liquidity range. So this one is the closest Okay, this is just my own rule. It's not really a very specific reason or anything. Just I find when I do this, I find a lot more success. Okay, my success rate got a lot higher. Previously, I can share with you guys previously my win rate was about 40%. 40, but I was profitable only because of my risk to reward. Okay, because I don't usually take trades 1-to-1. I always trade 1-to-5, 1-to-2. So because of this, I was able to see profitability, but not as much as I do after a year of trading that way. So when I changed this, right, I just realized, okay, my trades are going in the direction I want it to go. I'm able to see and understand where trades want to go. Okay, but what is preventing me from getting a bigger win rate is essentially my stop loss. So what I did, from always going very, very sharp like this, okay, what I do is I tend to just place it on the second or third liquidity range. Of course, there are exceptions, like I said. If the third liquidity range is quite far, I will just place it on the second one. If you ask me, oh, then what if the second one is quite far? Then I won't place it in the second one also lah. I will just give some room. Like this is the one. Imagine this one is not liquidity range. Okay, I will just leave some room. That's all. You don't have to make it very complicated. Okay, your heart will know what to do. Okay, so essentially this is roughly my stop loss. Okay, this is my take profit. I put it in the highest part of this liquidity range. Okay, so based on what I'm seeing now, if price starts to move up, because I can totally be wrong, okay, most probably price can suddenly do this also. That is the part of trading. It can do this also, which I'm okay with. Why I'm okay with it? It is because my risk level is within my my comfortable percentage that I'm okay to give up. Okay, you have to always do this now. Whenever you guys trade, you always have to make sure the amount you risk is something that you're very comfortable with. When you do this, when you enter a trade, you won't be someone that cannot sleep or eating also. You want to think how the trade is going. If you're doing this right now, right, that means your risk to reward, your risk management, not risk to reward, sorry. Your risk management is totally out already. You're risking a lot more than what you should have risked, and your heart knows that. You want me to give you a very simple example? Let's say if I give you $100, okay? Let's say one of the trade you risk $10, okay, to make back. Let's say we want to do like $20, all right? And then on the second trade, you're risking $1 to make back $2. Guarantee you'll be more worried about the first trade compared to the second trade. But the risk to reward is the same, it's still 1 to 2. It's just you're risking a lot lesser compared to the other one where you're risking more. Okay? So it all based on what percentage are you willing to give up. You must ask yourself, you must really be prepared. You must really let yourself know, I am okay to lose this much. Because in trading, you cannot just see win, 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 win. Of course, that's what all we want to see. I also, last time when I started, this is what I want to see. But then the market humbled me nicely already. But you always must have a you always must be open to there being potential trends that you can actually lose. Okay, it's not a bad thing. It's only a bad thing if you don't really have proper risk management. Then you probably will blow up your account. You must have an open mind to that. You probably will lose. Maybe you probably lose 4 or 5 trades in a week. Okay, probably you can have a losing week also. As long as you manage your risk, okay, I'm okay to lose 1% on the account. I'm okay to lose 2% on the account. Okay, I ideally recommend you guys to lose 1%. Okay, to train properly. Don't lose more than that. But I understand if you have $100 account, 1% is how much? $1 is it? Yeah. So only some markets can allow you to lose a few cents. Okay, so that case, okay, you can lose a little bit more, but make sure you calculate that percentage. Okay, always lose only a percentage that you agree with yourself. Okay, talk to yourself first, agree. I'm okay to lose this much. If it goes wrong, for me, yes, right now I'm in profits. If I close right now, I'm in profits. Okay, right now I'm in profits 3 digit. I can close right now. I can be happy. But the thing is, it will go against it can mess up with the psychology that I kind of build up quite some time now. Okay, the psychology is I take my trades off half at 1 to 1. So it's almost there, not yet, almost there. Okay, you can see how close it is. Okay, almost there. Even though it's very near, I still keep it. Okay, so the moment I reach 1 to 1, then I will take out half my trades, break even, forget about the trade. It is okay. If you cannot break even, so it's okay because I already won in the trade. Let it run. Okay, then I will just scale my stop loss based on how the market moves lah. All right, but if the market straight away moves down right now, I won't really have to. I won't say totally won't. Okay, I'm still human. I will still feel a little bit like, good life. I closed this now. At least I got 3 digits now in profits. Yes, of course. Humans sure will have this. Okay, I cannot lie to you say I don't have. Of course have, but it doesn't affect me as much as before. because at the same time, at the back of my head, I'm not worried about this trade because I know the amount I'm risking. And I know that amount I'm okay to give up to the market if I'm wrong. Because if I'm wrong, guess what? This will become my next topic for me to read and understand in the coming week. So I will write it down. I have a journal. So I write it down, then I will study it properly based on the weekend. Okay, or maybe if I'm boring or what, I can study it later on. Or maybe I can study it tomorrow. For me, the studying process is quite fun. Okay, you only feel lost as a trader if you don't analyze your market, if you don't study back why you lost, because then you will keep realizing, yeah, I'm doing everything correct. Why am I losing? I'm doing everything correct. Why am I losing? I'm doing everything correct. Why am I losing? This will make you feel very lost. Okay, I know how you feel. I really know how that feels. It feels sucks. Okay, it feels like you are lost. You don't know a way out. Thank you. I was wondering where my water. Then my wife bring for me. Sorry, I forgot. Talking not easy, Okay, so you will keep wondering, why am I losing? Okay, I'm doing everything right. The market, okay, don't blame the market. The market is never wrong. The market always moves based on what he wants to do. Okay, there's always a reason why the market is moving as such. We are the person that choose to press the button. Most of my trades that I lose, when I reanalyze them and then I put my strategy inside, I realize they are taken out of greed, they are taken out of FOMO. Mostly is FOMO, for those that don't know. FOMO is fear of missing out. I am so afraid of missing out on the trade, so I went and entered the trade. Okay? I sometimes I still got do this, but I changed my strategy. So what I changed, I would not recommend if you guys are new to do this. Okay, please don't do this. So what I do, actually why I press this, I still don't know. So imagine this, okay? If this is my ideal entry, this is my actual ideal entry, okay? Let's say I missed this. Right now, I want to enter here. Okay, is it a good idea? It's not a bad idea because risk to reward is still okay. But I could have gotten a better price and I could wait for a potential pullback. Maybe price can pull back into here. So you see, it will straight away become 2 to 8.84. Okay, risk to reward. A lot better compared to here 1.8. But let's say if I don't want to wait, okay, I don't want to miss out. Maybe got chance the trade will just keep moving up. Okay, got chance. There's a chance. Because like I said, we don't really know what the market will do. Okay, even right now I cannot consider the market will go up. Like I said, I could be totally wrong, and I'm okay with that. You have to be okay with being wrong in trading. That's the hardest realization most people make in trading. That's why very hard for majority of people to find success. Okay, you have to be okay with being wrong. So if I enter at a higher price, what I usually risk, okay, like now my risk to reward, okay, whatever percentage I'm risking now is the proper one because I got the entry that I want. But if I enter higher, I will significantly reduce that. Okay, so for example, let's say if I risk 3% on an account, let's say, okay, if I risk 3%, okay, let's just put a simple example. Okay, $100 account, 3%, how much is that? $3, okay, on a trade, which is consider risking 3% is quite high idea. Okay, on average you should risk 1 to 1.5 or even 2% if you're really confident 2%. Okay, some very professional traders, they risk up to 5%, but you must realize they have years of experience, they know what they're doing. Okay, so they risk very big amounts. Okay, that is different. Don't put yourself under their shoes. You are your own individual trader. You are special in your own way. So respect yourself as the trader that you are. Okay, don't try to be someone else, just be you. You are perfect. All right, just realize that. So where was I? Okay, so from risking 3% on how I usually take trades, what I will do, I will risk 1%. So it's not even cut in half. I cut more than half. 3% half is 1.5. Okay, I risk 1%. So that's what I do. So what happens is same example I give just now. If I give you $100, one trade you risk $10 to make $20. Another one you risk $1 to make $2. Even if that kena the SL, you lose $2, you won't feel much about it. You feel okay I should not have entered. This is based on FOMO. Okay, so this is what I get. but it won't affect you as much. But again, do not do this, okay? Especially if you're starting off. If you're beginners, do not do this if your psychology, your mindset is not fixed yet, okay? Because in the long run, it will train a very bad behavior, essentially gambling. All right, I only do this based on some trades, or not always lah, but some trades, because I know how the trade moves. Okay, like for example, crypto exchange. You see, when you want to move up, you see not? Do you see any pullback here? There's no pullback. This one, when you want to move down, okay, this is essentially a pullback in smaller time frames. If you know how to analyze, or if not, means there's no pullback. This one got, you see, in the same bigger time frame. You see, this is the pullback. So out of these three trades, only one has a pullback. This is based on crypto behavior, because crypto markets are very high in volume, especially when sessions all are open. Okay, when all the markets are trading, they're very, very, very high volume. So there's a very less probability for us to get a proper pullback if you're referring to only one time frame. If you're referring, you understand multiple time frame analysis, then you can find pullbacks. Okay, but if not, if you're referring to one time frame, then there's kind of highly unlikely for you to actually see a pullback. But also based on the crypto exchange, what cryptocurrency are you looking at? Like Bitcoin, Ethereum, if he wants to move up, guys, he will move up. He will fly. Okay, so I only do that strategy based on some currencies that I have personally experienced with, and I really have very, very high confidence. Okay, like I really have a lot of belief that the market is going to go in this direction, and then I will check my risk to reward. Is it pretty or not? I don't want one-to-one. At least need to be more than one-to-one. Then I will enter. But even though very high confluence, even though good risk to reward still, I will still scale down a lot. Like I said, from 3%, if 3%, I will scale down to 1%. Okay, I'm okay with earning lesser. Because why? At the same time, I cannot just think about earning. This can happen also. Okay, this can happen also. We can potentially lose, and we must be okay with losing. I'm okay to lose 1% versus losing 3% on a trade that I know I'm probably entering based on FOMO. You have to really understand yourself. Trading does that to you. Trading brings out a lot of self-awareness of yourself. Okay, especially greed, ego, pride, a lot. I went through a lot in 3 years. It essentially teach you a lot about yourself, trading. Yeah, so it's kind of a good self-realization platform, if you will, to learn. Okay, so guys, it's already going to be market open. Okay, so the other trade that I was telling you guys about is Euro USD. Okay, so I also got mentioned you can focus on buys. Okay, right now the trade is kind of moving down. All right, so this is actually another zone, another OB zone within the OB zone. Okay, because after this I want to end the live stream. Really, I need to focus on see if there are any opportunities or not. So essentially same thing, guys. This is basically the support range where I'm seeing price reacting on it, and this is the resistance range. So why I say I can focus on buys, this is just my self note. I'm just waiting for price to come back into the nearest range. Sorry, this price already got done already. Because this is why the break. Okay, this is the retest zone. Focus on price should not come below this range if this is the pullback. Remember the concept that I teach you guys. If price trade below this range and coming below and close, this don't focus on buy. You don't even focus on this trade for buy. Okay, but the support and resistance range will maintain. This will become resistance. So if this goes below, just focus on the retest. Okay, if you're starting to see reaction, focus on sells. All right, then this can be the next range which we can aim for. All right, if something goes in the opposite direction of our bias, there is still opportunity. That is why we are basing our trades based on how the market reacts to a certain key level. We don't react the moment market comes into the zone. That will basically be gambling. We're basically trading blind. Okay, we don't want to trade blind. We want to understand what the market is telling us and what the market wants to do. Okay, so just this is basically the trade style. Euro USD, I'm focusing for this week. I'm waiting to see what is going to go on. And then ETH, I'm already in lah. Okay, so essentially, since I see this fair value gap here, I'm probably will move my take profit a lot higher compared to just this liquidity range. But let's see later. I'll see how the market react. Everything is about reaction, anyways lah. Okay, guys, 2 more minutes. Okay, so thank you so much for joining today's live stream. I hope it was insightful for you. Okay, I hope all the advice and all the things I shared with you resonated with you in some way and was able to help maybe give some sort of clarity into your trading. Okay, I really hope so. If it has, please do not forget to leave a like in the video, subscribe to the channel if you haven't already. I'll be seeing you all in the very next live stream, which probably will be tomorrow. Like I said, I'm doing my best. Okay, I will continue to do my best. All right, have a wonderful day, guys. Take care. Thank you so much for giving me your time today. Catch you all in the next one. Okay, bye bye, guys. Happy trading. Trade safely.